Hey, good afternoon, everybody. So I'm going to do something a little different this week than my normal weekly watch list. And a lot of that has to do with the fact that people are consistently asking me, Bill, how do you find your levels? So I thought today what I would do is we'll just spend some time on one index being SPY. And then what I'm going to teach you here, you can translate to QQQ or any other stock that you want to keep into consideration for, is this thing going to go higher or going to go lower? So what I'm going to do is I'm always going to start on a daily chart, right? You always start at the 30,000 foot level and then you bring yourself down. So what are some of the things that I can infer by looking at this chart? Well, first and foremost, I can tell you that there is a gap where the market gapped up right here, okay? Now, gaps will typically fill 80 to 90% of the time. Well, what does that mean? That means if the market starts to lose momentum, then it will head all the way lower to fill the gap. A gap is the distance between a candlestick high and a candlestick low, okay? Remember, up here on the top, we can see our candlesticks. So the high of this candlestick right here was 504.27. The low of this candlestick was 505.70. Therefore, you have a gap. So I will always be cognizant of what is happening with gaps. Now, mind you, we had a huge bearish engulfing candle here that literally wiped out 2 months worth of gains, right? Because the market was at this exact same level for the most part back here on Thursday, February 22nd. Now, mind you that these are considered liquidity zones, right? So if we look at this candle high, what did the market do after it pushed down and gapped higher? It held this zone. We moved up, it held it here on 1 day, 2 days, and then it failed it. Now, mind you, there was also a gap that you could have played to the downside. So here was the old gap. And what did it do? It literally moved up, and then as the market came down, it filled the gap. And then after it filled, it started to reverse. Look at this candle low right here. The market pushes down to that same level. So these are called areas of liquidity, where the market is going up, coming down, going up, coming down. Anytime you see the market reversing, it's reversing on volume. And this is a liquid zone where there are buyers. And when there's more buyers and sellers, the market goes up. When there's more sellers than buyers, the market goes down. Okay, so this gap is filled. Once the gap is filled, there's no sense in keeping it on the charts. This is an open gap. This would also be another area of interest that if the market pushes to the downside, the first place that I think we're going on a daily is going to be back down to where did we have liquidity? We pushed up, we pushed down, we gapped higher. So this would be the next area that I would want to watch, 497, okay? And then if we drop from there, I'm going to want to watch 493. But let's talk about this to the upside. So where do I think we're going to the upside? Well, on the daily, the next area that we had a lot of liquidity before we pushed down was all the way up here at 505. Now, we couldn't go in one of two directions. We're going to keep pushing up to this 515 or we're going to push lower. One of the two things is going to happen. We're going to either head back up, and I'm going to also just remove this line here. We're going to head back up to this liquidity, or we're going to head down to this liquidity, or down to this one. So what do I do next? Well, I'll go from a daily, and then I will want to go and look at this from an hourly time frame. And let's just see what's happening on the hourly. Well, you can see my prior daily pivot is still here. Here's my low. And again, this low goes all the way back here to February. And what did we do? We pretty much bounced off of it right before the market closed. So what am I going to look for to the upside? And where would we go? Well, again, if we're going to have anything in between these zones, so right now it's called trading between zones. The last liquidity point that we cleared from a hurdle perspective, and I'm going to go ahead if we can, and I'm going to want to put a zone right here. So when we pushed down, we came back up and we cleared the zone. Let's change the color. Where's the next zone of liquidity that was going to exist when we're moving to the upside, right? It's going to be right here. We cleared this level of liquidity. So we're always looking left and saying, what did the market do in the past to say, where do we think we're going forward? Now, if it uses this as a foundation to move higher, I think we're probably going somewhere right here before we go to 515. So you're looking at different time frames to say, where do I see that the market kept selling off? Well, it sold off here. It sold off at this pivot high here. It sold off at this pivot high here. It sold off at this pivot high here, but this pivot high is also my daily high, okay? So I'm always looking to see where did the market in the past have support, and then you'll note here, right here, this was support, it then turned to resistance. That's why the market pushed down. So if we start to approach 512.68, I'm going to probably want to go short. Why? Because all these people who were long up here are now able to get out of their position for a minimal loss versus down here, it was at a significant loss. So you're looking at pivot highs and you're looking at pivot lows. And then where do you have the most amount of confluence where they are touching? Then once you do this from an hourly time frame, you can literally go and do it from a 15-minute time frame. And you'll see, is there anything that I'm missing? Not really. I mean, you're pretty close here. You could say that the market pushed down, found a little bit of stability, and then before it pushed lower, which ended up being the high on Friday, right? So you're trying to say, let's just trade zone to zone. Keep it really simple. You don't need to overthink this. So right now you're between zones, 507, 509.68. When the market opens on Monday, what am I going to be watching? Well, I'm going to be watching then yet another perspective to say I'm within these two zones. Now I want to say, what is my pre-market high? I'm going to change that color. What is my pre-market low? And then how do we observe these? Because again, guys, this is liquidity. The market's now trading in this micro range or this mini range. If it breaks to the upside, I'm going long all the way up here to 509.68. If we break low and hold, I think we're going back down here somewhere toward 507. Again, prior resistance kind of got choppy in the overnight hours, but it held support and it dramatically moved higher. Okay. Now, if you want to get even more granular, you can do this on a 5-minute. Now, that's getting a little bit probably too much because you're getting too much in the weeds, but you'll also be able to go back in time and say, well, where did we consistently bounce? Well, here's another area where we consistently bounced. Right here, 507.74, 1, 2, 3 bounces. So if we break this 508.23, you'll want to start trimming at 507.74, maybe not wait all the way down here till 507.37. Now, if we break to the upside, I really don't have anything resistance-wise that's going to stop me from breaking a pre-market high all the way back up to 509 if the market is strong. But once we get up here again, sellers, 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 we push down, we come up, sellers, sellers, we push down. We are now trading lower in the overnight hours from what was happening on Friday. Now, this is SPY. We still got to wait for the overnight hours to develop, but this is how I look at technical analysis and setting my levels in order to trade the pre-market. So with that, very different than what I've done in the past with you, but keep it simple. Again, we start on the overall daily time frame. And as you can see, all of my lines are here. I don't need to erase them. I don't need to make them go away. My gap fill. And then let's use a little bit of software just to say, is Bill probably right with his theory? There we go. So if you look at the software, when we turn it on, they literally line up in the boxes where there are buyers. The candlestick low, buyers. We have a gap here. The software that I use even tells me that there's a gap. You can see it. Let me go ahead and I will highlight that for you right here. See, a gap, and then it tells me the size of the gap. I'll go ahead and include the information on the indicator if you're interested. You have to be using TradingView. So as long as you're using TradingView, this is one of the analysts that I follow, Bryce, with over 4 years, technical master, if you will. But look at my lines of liquidity. They literally line up with each of the boxes from a sentiment perspective. So the red are all your sellers, the green are your buyers. And then what do we execute on? We execute on the 1 minute time frame. Now, mind you, this is going to be messy after hours, but if you watch what happened on Friday with the levels that I said, again, we got to the bottom of the buy zone. It pushed up. As soon as we were able to hold this 507.37, we then went up. And we held. What was this level here? It was a prior pivot. So with that being said, you can then see more buyers started to come in. This green developed on Friday while the market was open, and it pushed up where? To where the sellers are. Then the red started to form to know you need to then start trimming that position if we can't break higher. Now, if we were able to break higher than this level, which is pretty much 510, we had room all the way up to 511. And that's how you would want to stay in a trade. And that's where you can then turn on your VWAP. We're well above VWAP. You can turn on your MA ribbons. So your EMAs, your 9 and your 21, we are holding the 9 above the 21, and we are definitely holding above the 50 SMA. And this was a opportunity to take a ride higher. But we don't even have to use that. We could keep VWAP off. We could keep the ribbons off. We could keep the supply and demand off. But you can literally see that it stays between the lines. So hopefully that was helpful. If you have questions, reach out. I'm always happy to help, and have a fantastic trading week. And go try this on a couple of your charts. So don't sit here and wait for me to give you price levels to tell you what to buy and what to sell. I just did it in a matter of 12 minutes. And what I did, each of you can do as well. And if you want to send me your charts, just email them back, and I'd be more than happy to take a look. With that, guys, have a fantastic week. I'll talk to you all soon. Take care.